Okay, good morning, guys. It's 1/2 past on my screen, so I guess it's time to get started. My name's Steve Ruffley. Um, been with Epic Street now, I guess, for 10 years as a presenter, contributor. So yeah, thought I'd just dip my hat back into the ring and just kind of sum up the world for a little bit, and just going to give you an idea of what I'm thinking. I'm going to do a 4-part webinar series over the next month, one a week, just to kind of, condense it all in. A lot's been happening in the world. A lot of things have changed. Obviously, a lot of people had a lot of time at home. So, people's interest have diverted back to the markets and crypto, etc., and things like that. And that's something I'll talk about in a different webinar. But I think some of the principles I'll talk to you about today are to do with economics and, the kind of basic principles of how you understand the markets, how you understand how they move, how they function, how the world is meant to function. And I guess that's the operative word here, meant. A lot of things that I've spent the last 20 years kind of refining and learning and understanding has really been tipped on its head. And, we got an idea after the financial crisis in 2008 of how the world was changing, how central banks were operating, how governments were willing to, let things slide and, they're kind of too big to fail. And after, the kind of pandemic hit, it was clear that there were certain things that were just going to be the new norm. And this is the kind of thing we've got to get our heads around now. That it's not that, the economy is there for everybody. It hasn't been there for everybody for quite some time now. It's in fact quite the opposite. The economy is there to service the rich takers, the people that, have the ability to leverage against assets, and everybody else, who's just trying to make the way through the world. It's kind of tough luck, really. It's you should have been born 30, 40 years ago. That's what they're trying to put the message across, especially places where I live in New Zealand, where everybody thinks, is the poster child of the world. It's an amazing place. We don't have the virus and everything's amazing here. And yeah, sure. Hey, don't get me wrong. I was watching Russell Howard last week, and he was like some unhinged lunatic. He was walking down the street without a mask, and didn't have to do any social distancing. He could hardly cope. I think he only did about an hour when I was watching him. He was ready to get down the pub and just go and be in the land of the living. So yes, there are lots of, positives coming from New Zealand. But, the kind of flip side of it is, there are lots of things that, aren't quite so positive. Massive divides in inequality have, popped up over the last kind of, 3 or 4 years, and now are getting absolutely, exacerbated. The average house price in Auckland's $1 million, and, the average wage for someone in Auckland's about $40,000. So, all these things, and economies and cycles and things you understand, catch up with places. Nobody's got it all sorted. Nobody's got it all figured out. That's absolutely for sure. So the kind of economic side of it, now for me personally, after, writing books and doing thousands of webinars and trading the markets for such a long period of time, you feel like, you've got it. You feel like, you've got a handle of, basic things like, Dow theory or the good news, bad news, kind of scenarios in the market, and, kind of how markets ascertain risk, and, what happens when we've got high inflation, what happens when we're worried about, ultra low interest rates. All these things have kind of gone out the window, haven't they? And it doesn't really matter. It's interest rates are going to stay low and be low across the globe for a long time so people can service debt. It's just as simple as that. We didn't learn any lessons after the global financial crisis, where we could have let some banks fail. We could have let the world readjust. We just wanted to prop it up, keep the status quo, not let the wheels fall off, and then just think it'd be fine. And, maybe it was going to be fine. But then the pandemic came along, and we didn't really kind of have any more tools. So we cut already, low interest rates low, which favoured, the people that had the assets, and, pushed those asset prices up. And that was it. So, I mean, if you're talking from a global pandemic, the world's going to end type scenario, we look at gold. and a bit of a sell-off of gold this morning. But again, everyone was happy to predict that gold was going to reach 2,000, which it did and broke through. But then it's going to go to 2,500, 3,000. There seemed to be no top, no end to what things can now be physically worth. Everything. It's the bubble of everything. People are calling it, and when it finally, kind of corrects, crashes, or whatever happens, that's probably the term they will use. But as you see from gold, it got us, above 2060, but then all of a sudden it started to kind of come off, and we had the pandemic, kind of back here, and it's why is gold not higher? I mean, if you're talking about basic economics and unlearning economics, if it's bad news, well, bad news is that that the global economy has had some of the worst contractions it's ever had. People are in lockdowns for whoever knows how long. It doesn't. We don't know, do we? Sometimes it's going to be a month, and it's 2 months, and it's 3 months, and it's back down to 2 months. So, we don't really have any idea, and we don't have any kind of, precedent really for this, do we? We don't never expected to be locked in our houses. Well, not locked in our houses, but told we can't leave our houses for our own good. We've seen, kind of global, kind of air travel completely decimated. We've seen, certain industries, especially the hospitality industries, crushed. So, when you're talking about bad news and bad things happening, why is gold not up at 2,100, 2,200? Why is it not up towards 3,000? There should be really in these kind of economic situations of uncertainty and unknown. There should be no limit to where gold could go. It's a store of wealth, protection against inflation. All the things you taught about in economics. It's part of a balanced portfolio. It's somewhere to go when times are uncertain. It's physical. It's there, and yet gold's coming down. Is that because we started rolling out the vaccine? Well, no, we didn't know anything really much about the vaccine, and gold was selling from the highs up here. So this whole idea that the kind of good news, bad news principle is alive and well in the markets is just a myth. Gold's being pushed around by hedge funds and I guess central banks. I mean, you have to remember when governments need money and need to cash in, what did they all have a lot of? Well, except the UK when Gordon Brown sold all that at the bottom, but good old Gordon, bless him. But what do generally countries have reserves of? They have reserves of physical commodities. They have reserves of gold. So again, there's no surprise from my mind that gold's getting sell off from the highs. And this is something I've never kind of changed tack on. I've always said sell gold high. And for me, it's been a fairly kind of reasonable trade. Again, you can look at the charts or if you want. It's clearly an uptrend. That's fine. The way I trade is nothing to do with following the trend. The whole point about everything I'm going to say over the next kind of 4 webinars is that don't listen to anybody. There's no one's your friend out there. Nobody's trying to tell you the right information at the right time to benefit you. Everybody's saying everything to benefit themselves. Warren Buffett doesn't tell you what stock to buy before he buys it. He tells you after he's bought it and then expects the price to follow. So, again, it's unlearning everything you've been told, unlearning everything you think you trust. And, even when you read the news, kind of reading it with a different slant, reading it as I try and do now, it's just trying to be completely market neutral and think who's going to make some money from, the way this article's worded or this piece of information's presented, and how can I then go into the markets and make some money myself? Because that's the only person I care about in the markets is me. And you should too, because there isn't anybody out there that's there to help you. Nobody at all. So again, as we see gold coming down, again, is this a sign that the vaccine's going to be rolled out? The vaccine's going to be, better, going to lower deaths, transmissions? I don't know. We don't know, do we? It's not like the world's going to get back to normal tomorrow. I mean, we're already talking about, having, all these vaccine passports and no more control for your own good. Of course, let's have a vaccine control to check where you are and you've been a good boy or girl, and you're going to do your bit for the greater good. So for me, this is just essentially markets moving sideways on no kind of news, really, no kind of new news. So what you're looking for is probably one of the only things you can generally rely upon is just that technical movement. So again, some basic fibs here. You've got your 50%, as being your kind of pivot point, and I've got fibs within fibs here. So, you're looking for highs and lows. When the market goes up, the market comes down 8% of the time. It retraces to kind of 50%. Without making a new high and a low, and that's pretty standard. So within that, you just bet your basic framework, maybe on your, from your weeklies to your dailies and going to your hourlies, and then you just look for the trades when the market is getting to a high point, you sell. And these kind of trades are what you should be trying to do. And again, you're not looking to sell here and get out here, sell here, get out here, sell here. Certainly, I'm not trying to get out here. I'm saying each one of these hourlies. When you get to a high point, this can be money here. This is just a bonus. All these kind of wasted wicks that try and push up, into no man's land, on the 15-minute charts, they look even more kind of, appealing. These are the kind of things that, when you do see kind of, 50% pivot and your technical points, and you do see a high point, you generally see some good selling afterwards. And it's not amazing, as I say, it's not like, you're going to be able to retire off these trades, but if you pick enough of them off during the day, and again, the critical thing that most traders are struggling with at the minute is funding an account with the right size of amount to trade the right kind of size. Because, I can sell up here, then get out here before the market even turns back. But I'm not selling one or two lots. I'm selling hundreds of lots at a time. And yes, not everyone can fund big accounts, but you can get to a point where you're funding enough where for the short term you can sell into spikes, and you can sell maybe 10 lots in gold, which is quite a lot, and average in maybe once or twice with a maybe a 15-20 grand account, and you can make yourself a couple of grand. Just by the time the market switches and kind of gets away from these points of resistance, gets back down, and you can do that once, twice a day. Well, you're doing pretty well for yourself. But the problem is everybody's trying to sell gold here, wait for 2 or 3 days and get out here because they're trading such small size. What you're doing is you're leaving money on the table and just being a slave to the P&L, making money, losing money, or, kind of back to kind of break even. Oh, not sure. It's not going to go. I get out, bang, bang, bang. So, the whole point is, it's being right at the right time and being able to kind of pick out the trades from your fundamental understanding, which is basically, tying all those economics, from kind of like your sentiment to your indicators to all the other things that we look at, like data, and then try and kind of put it into a technical framework and make some money that way. So, I mean, again, you can do that kind of process on any single product. I mean, again, if you look at the stocks, for instance, the stocks should be down. I mean, when we talked about the pandemic, here, then it's sold off, and it was all kind of doom and gloom. The world's going to come to an end. We've got this pandemic. That's it. World's over. Get out your stock, and bunker up and see what the world has. But as we learned from 2008, way back in the charts, the world doesn't want that to happen. The 1% doesn't want that to happen. The governments don't want that to happen. We haven't got to that stage where we want anything to fail. Well, anything with any note to fail. We just want everything to continue because that's how the world works now. It isn't about survival of the fittest. It's about survival of the best connected, or survival of those with the most employees or the most political votes. Or that's how economics works now. So when you see the market selling off, the Fed decide, no, that's enough. So we don't want to break 2000, a real kind of psychological and technical level. So we'll buy it up. Market wasn't sure. Okay, you're not sure enough of your market. Well, how much has the Fed got? Well, we print money. So we have all the money in the world. Oh, okay. How about you billionaires? You 1%ers? Yeah, we've got a bit of cash too, yeah, and our stock's gone down, so we don't like that. Well, here we go. We'll all buy it back together and get a bit of confidence back in the market. Yeah, put it back above 2.5, 2.6. That's pretty good. Yeah, we'll make that the hard bottom. Easy. What's the next target? A new high. So the market just keeps going up. Take a bit of profit here. Everyone's a bit happier. Yeah, again, nice bit of support on your technical levels. Oh, no. We're going to break down some more bad news about rising cases, in America. Oh, Trump's might get in, he might not get in. Now, we'll sort Trump out. He's a lunatic. He's never going to be president again. Grown-ups are back in charge. Ah, that's right. That's all good. Markets go up and make fresh highs. So, doesn't matter about economics. It doesn't matter about all the things that have happened from here to here. It doesn't matter about non-farm payrolls anymore. That used to be the biggest figure of the month. Set the tone for the month. Who cares? Non-farm payroll is just a made-up figure. It's just some people that, have created some jobs. Doesn't mean that if the non-farm payrolls are 200,000, you've created 200,000 doctors, unfortunately. You could have created 200,000 anything. So what does that data mean? Well, data doesn't mean anything good, or it doesn't actually mean anything bad in its own regards anymore. So the data has become absolutely useless. So data is like jobs are created, so what? Jobs are lost, so what? Right? Because what the data really means is, what's the government going to do? So because everything's too big to fail, everything's too important to fail, and the government can solve every problem just by borrowing more money, because that's how we live these days. So the non-farm payroll is bad. Oh, actually, non-farm payroll being bad is actually good for stocks, because that means the government will have to put more stimulus in, which means printing more money, which means rich people get richer, asset prices go up, and all the things we learned from 2008 and all the things we tried to avoid here means everything goes back up again. So actually, if non-farm payrolls is bad, that's good. Oh, okay. So if non-farm payrolls is good, is that bad? No, if non-farm payrolls is good, then that's good because it means it's working. That everything being too big to fail, creating bogus jobs or nonsense jobs, or creating, kind of jobs around people getting stimulus because stimulus is more important than real work and real jobs. That's not good, but it's not necessarily bad. Okay, so you're still with me? So what we're kind of really doing is, from an economic standpoint of understanding key pieces of data, like how many jobs are created in the US, data doesn't matter. Okay, it just means that if it's really bad, we're definitely going to get stimulus. If it's not so bad, we might get a bit less stimulus, but stimulus. And if it's good, well, it's never going to be good enough, for the markets anyway. So we'll have to give them stimulus anyway because we don't want to upset the markets. So that's how all these things are positioned. Don't upset the markets. Don't upset the people that move the markets. So things like GDP. Okay, that's another interesting one, isn't it? Look at the GDP figures and it's like, oh, well, GDP figures aren't as bad as we thought. Well, they're still as bad as they've been since, the end of the Second World War, before the Great Depression. But that's all right because they're not as bad. It's all right. You've only shaved off, a little bit of GDP growth. We can get that back. Don't worry about that. That's all right, Steve. You keep buying the stocks because, it'll turn around. As Trump said, it's going to be a great year this year. Well, it's going to be a great year because we don't have that muppet, in charge. But what we don't, what we do have is this hope that the economy is going to bounce back stronger and it's going to be as good or if not better than this time last year. And all it's taken, that's right, in this new brave world we live in, is a couple of $1 trillion. And then, let's face it, we're stalling a little bit and people need, $1,400, in the US to kind of get things ticking over. So we'll just stick another 1.9 trillion in. Or whatever it is. Let's make up numbers now because billions don't matter in the markets anymore. Billionaires are for billionaires, for them to kind of live their lives the way they need to. Trillions are for the average, working man. That's what it takes now to keep an economy ticking over, trillions. So, at some point, we're going to, and I said this, not probably, 18 months, 2 years ago, central banks are soon going to have to start talking in new numbers because, at some point, trillions aren't going to be enough. And that's the kind of frightening thing about the world right now. It's like, you ain't rich if you're a millionaire. Everyone's aiming to a billionaire these days. And in, governments and central banks and, kind of economic policy tools, it's all hundreds of billions or trillions. And why not? Seems perfectly sensible to me. I mean, we just keep borrowing to infinity and, kind of borrowing from the future generations, that will have to pay it back and everything will be fine, won't it? Because we'll just create this imaginary jump in GDP growth. We'll pay off that debt in no time and everything will be fine. That'll be great. So, yes, So from that kind of standpoint, and like looking at economics, it has all changed, and it's not going back, is it? You know, it's kind of the whole political landscape after Trump isn't going back. The way people talk to politicians or talk about politicians or they talk amongst themselves has changed. It's become a bit of a free for all. You know, it was always a popularity contest, but now it's more of a, I don't know. I don't even know. It's a contest of who can say the most outrageous thing and then still get away with it. And it almost seems like the governments and the policymakers are doing the same. You know, like they're given this air of control that they've got everything, you know, kind of sorted. And, you know, like, don't worry, you know, it's kind of, you know, the Fed are on it. You know, the Fed, you know, it doesn't matter, it might creep above inflation, but that's all right. You know, don't worry about it. I mean, you know, you're talking about Mario Draghi now, you know, trying to sort out Italy. You know, I've listened to Mario Draghi for years as the head of, you know, the ECB, and it's price stability and boring comments and trying to, you know, interpret what he meant, because they never come out and say, yeah, all right, market rates are going up, or yes, market rates are going down. It's always coded messages. So I spent 20 years trying to decode these messages and understand exactly what they meant, because they were talking about, you know, price stability and controlling inflation, you know, and making sure, you know, kind of it didn't get over the kind of 2% target, and that everything was ticking along and everything was controllable. And then that all of a sudden, all that kind of coded, you know, kind of, you know, very kind of, you know, cleverly choreographed, you know, language through the ECB meetings that were boring as, but you had to sit through and listen to them, and you tried to make some money off it. All went out the window, and the world didn't want that anymore. They wanted Trump to tell them what was going to happen, and that he was going to, you know, kind of, you know, ban this, or he was going to block that, or he was going to kind of, you know, cut this or do that, and then people were interested again. So that was fun, wasn't it? It was amazing. You know, that you don't listen to the central bankers or the people you employ to do it. You let some moron who thinks he's the cleverest guy in the room, that's never made any money in his life, just been given it, you know, kind of speak for all the grown-ups and clever people in the room. That was fine, because it didn't really matter, because it took the attention away from stuff, and people were kind of comforted that, you know, if Donald Trump could be president, then anything truly was possible. But then now we're kind of getting back to people like, you know, Janet Yellen and, you know, you know, kind of the old kind of guard are getting back in control, and they don't really have any more answers. You know, they don't have any more kind of, you know, any more kind of sensible things to say. They just deliver that kind of message in a much more kind of controlled and grown-up way. So again, they're talking about, you know, kind of pressures on the dollar, and, you know, kind of, you know, they're keeping their eye on inflation, but they're happy for inflation to overshoot for a short period of time because they think they can control it. So again, that's why we're seeing movement in the dollar. You know, kind of people making longer-term bets on, you know, how the Fed are going to position the relative weakness and strength of the dollar. And when you talk about, you know, things like, you know, the post-pandemic world or the pandemic world, you know, the dollar's a safe haven. So we've seen the dollar kind of, you know, sell off, you know, kind of, you know, for a while now. But again, it's been in quite a tight kind of, you know, range, you know, and again, you know, Japan's got its own kind of problems with its own kind of, you know, aging population, et cetera, et cetera. And, you know, Japan's the model really of modern economics that we've kind of adopted, because, you know, Japan has an aging population that it will never be able to replenish ever. And, you know, has a very kind of staggered society. It doesn't like kind of, you know, too much foreign, you know, kind of integration, you know, from a kind of, you know, a kind of immigration standpoint. And, you know, the government's been very heavily involved in buying, you know, the Nikkei, and has been for years and years and years. You know, I think it's 80% of companies, the government owns more than 50% of the shares in the Nikkei. So, you know, it's kind of these kind of like zombifying, you know, economic, you know, conditions that lead to these kind of zombifying, you know, kind of social kind of problems. You know, I've been around for a long time. So if you want to know how kind of the world might turn out, then, you know, Japan's a good model, because their economics were, you know, kind of, you know, don't let anything fail, support the businesses, you know, let them, you know, get to the point where they're completely reliant on debt and government support. And, you know, there is some innovation, but it's stifled, and people get older, people get, you know, less interested in pushing things forward. And that's where Japan is, unfortunately. That's just where Japan is. So this is what you're going to see in other economies that start kind of supporting their companies and supporting the kind of this obsession with debt and not being able to kind of live on your own. It's like the the kids that fly the nest and come back because the world's too hard. Well, if you rely on these kind of economic kind of conditions, then expecting things to change are just ludicrous. They're not going to happen, are they? So so again, I've never been a massive fan of the Japanese economy or the Japanese dollar, but as I say, it's got its own problems. So that again in itself is a safe haven currency, but the dollar is always going to out-trump it. It's always going to be a more desirable currency just because it's just a bigger economy. Until China claims its biggest economy crown, we're still saying America's got the biggest economy. So kind of like cycling through the charts, I still see that now the grown-ups are in charge, as in Biden and Yellen. There's a lot of room for the dollar to go up, and it doesn't really matter so much the strength of the dollar from this point. It doesn't matter what Biden says. Trump couldn't do it, and Trump's amazing. Trump's a genius. Trump's going to bring all the manufacturing back to the US, and he was going to kind of change everything. But has he done that? Well, he hasn't. So it doesn't matter the price of the dollar. The whole point Trump didn't get is, you can't have everything. You can't have all the manufacturing back in the US and have a strong dollar because then, that's basic economics. Your exports are too expensive. But at this point, it doesn't really matter, does it? There's nothing Biden's going to do that Trump couldn't do or anyone couldn't do. It's just too expensive to produce things in America, full stop. So you're not going to get Apple, in their record kind of sales figures going like, oh yeah. Well, we'll just go and build iPhones in America. We'll build them in Arizona and get all these kind of people in. But yeah, people just have to pay $5,000 for an iPhone now because that's how much it costs to make it in America. And kind of have all the kind of health and safety, all the kind of workers' rights, all this kind of stuff. Yeah, we'll just do that because people will pay $5,000 for an iPhone, won't they? No, they won't. So the reality is, America and it's this whole kind of idea of return to manufacturing, it's going to have to be internal. Americans going to have to buy that. So it's not going to, really be suffer too much by, having a cheaper dollar because the exports are just not the way to do it. They're going to have to get Americans buying American. And, they can do that because, they have, a rich economy and they have products that Americans want. They want the Porsches, they want the Mercedes, but they're happy to buy all the American crap as well, aren't it? Let's face it, Americans will buy anything because they're pretty dumb. That's no offense to Americans, they just are dumb. That's just the way they are. There's any Americans in the room, you feel free to argue, but after what I've seen from you guys for the last 4 years, you know what? Nah, it's going to be a tough argument to win that. So, and the kind of like hourlies, we're seeing the dollar kind of strengthen, and that kind of leads to my, argument that for basic economics, and this is just basic economics, I can't argue this too much, that, when the dollar becomes more expensive, gold becomes more expensive, so people get out of gold and sell it and go somewhere else. So that's probably the only bit of basic economic rationale that still works in the markets. And it's not even, again, like, the rationale that, good news, bad news, stocks go up, gold goes down. If the dollar goes up, then gold should go down because it's just a physical, correlation between the price of, that asset and what it's priced in and what it costs. So I don't think that'll go away anytime soon. That's about that kind of only thing that rings true. So, I mean, again, you're looking from the markets and, economic standpoint, we've got, the good old euro. So good old euro, sell it high again, from a technical perspective on your hourlies, you see these points, around the 50% and, the fibs work really, really well. All these kind of bunch of 50% has been held and we break the 100%, the 161, 261, 423 spot 6, a good points of interest for the market to get to and lower, very nice technical trades. And, from an economic standpoint, what's the European doing? It's lost the UK. We finally had Brexit. Didn't think it'd ever end, did we? We think it'd just go on forever. We just do this little merry willy-wonky dance. But democracy is democracy. It won out. But from an economic standpoint, I guess, the European Union's got some tough choices. It's kept, its interest rate very, very low, for a long time. And it's got to make a decision what it wants. I mean, does it necessarily want a strong currency? Well, probably not. Because, when you're talking about economics, you're really talking about the economics of the European Union. Well, it's been Germany. Germany's the one that's been pushing things forward and had all the money and been the grown-up in the relationship for such a long time. And, when you talk about economics and, kind of understanding that, or kind of even discounting it, what you can't discount is how big a manufacturer Germany is. So Germany is still a massive, hugely massive, manufacturer. Its GDP is quite skewed compared to a lot of companies. Countries that it has, a massive, kind of manufacturing versus services. So it does actually require a weaker currency to be competitive with its exports. Because it exports so much, the kind of weaker currency is going to help. So obviously we've seen a rally, kind of in the euro, again, can be related to, kind of shifts out of, the dollar when Trump came in. It could be related to, China getting rid of its, kind of huge reliance on the dollar and moving into the euro. But I mean, again, each country, each kind of, kind of economic area, has to deal with these things, and these currency influxes, that they do kind of shape economic policy. So for me, this is kind of something that you've unlearned, that it's not necessarily the dollar versus the euro anymore. It's kind of the dollar versus the euro versus China, and it's the dollar versus euro versus China versus everything. So you can't really rely on just that dollar strength equals, euro weakness. Although it looks like this in the chart right now, again, we're still towards the top of the euro, still relatively high from value perspective. So again, for me, it's understanding, that I don't think the euro's continued going up. I think there's a lot of bad news, a lot of negativity coming for the European Union in general. But I think because of the situation of the dollar and again this relationship with China and everything else, I think the euro is going to be pushed up, and economically that's going to be quite difficult, for the kind of big producers and big exporters like Germany. And Germany's not really done itself any favors with China. It's not done itself any favors with Trump, and it's not done any favors with its own people. Germany's kind of a little bit conflicted all around right now, and Germany's trying to keep the peace, so to speak, and trying to keep Europe together. But it's kind of, who else is trying to really keep Euro together? We've got already, the French causing problems with Brexit and the border. They're talking about the vaccine, they've not got enough, and then the French people are coming out saying they're not going to take it. There's a lot of kind of things that, are complex, and what's complex is people. People are complex, and what's complex is, you see how difficult it is, to keep all the states in America aligned. How difficult it is just to keep the UK aligned. You've got Scotland talking about, kind of a second referendum, etc., etc. So economically, and talking about all the things we've talked about, like, GDP and job figures and stuff, they're all kind of irrelevant. They're all kind of coming back to who's got the most stimulus, who's got the most economies of scale, who's got the most firepower to do what they need to do. And really what it kind of boils down to is that the 1%, the central banks, all they want to do is keep the stocks up. They don't want them to fail. They don't want, any kind of, panic to come into the market, because what they've learned is that, as long as the majority of people that have the money and have the jobs, as long as their house is ticking up, or, their stocks are ticking up, everything is fine. And everybody else just has to get on with it. They didn't have anything anyway, so we don't really care. That's what we're saying as a society. Think about back to Bob Geldof back in the 80s. Give us your money, kids are dying. Well, he got shit rich, didn't he? And he was off, living the life, him and Bono. Well, kids are still dying. There's just more of them now. So he didn't really do anything, did he? He just did everything for his own gain. And that's really just how the economies are and how the governments are right now. It's kind of the rich get incredibly rich and everything. Everybody who's got a bit of something does okay. And the rest of the world, we just don't care. So, as I say, unlearning economics is actually quite simple. You don't look at any real data at the minute, because it's all pretty irrelevant. You look at it from the sidelines and think, is that going to spur the governments to do more or even more? That's all it is. They can't do any less. They can't do less. Less isn't an option. So they can only do more. So there's only more stimulus coming. So that generally it means, dip buy stocks. And again, those technical levels, like the FTSE, just buy it down here, buy it there. And even if it goes further, buy even more down there. Because by the end of the day or a couple of days, it'll be back up here. Because there's nothing else changed in the world that no matter what happens, the governments are going to come in and make those things go up because that's the only thing important to them. So no data can shock it. No numbers on COVID can shock it. No miracle cure vaccine can shock it. All the data, all the economics means everything that's low from an asset standpoint has to go up. So again, gold, it can keep selling off from the high, but it's going to bounce back up because, again, the old economics out the window. Just because stock market's high, gold can be high as well. Just because there's so much money in the world and there's so much ways to generate wealth by gold being high, that we keep pushing every single asset up. And remember, currencies are not necessarily assets, so currencies will have their own coefficients. They'll have their own bias. But again, they move in, kind of their own ways, and people can see value where I can't. I'm not saying I'm right in everything. But what you'll see is that, the stocks will continue to bounce up until there's an almighty crash. And you have to remember, there's always an almighty crash because that's how governments get paid. Yeah, when the markets crash, that's when governments get paid because everyone has to sell the stocks no matter what, and everyone has to pay tax. So it's all these things, like, they're not new. It's just when it happens. But the thing is, you don't sit there and keep selling every high in the stock market expecting to crash, for the last 10 years. Because if you do, you're doing the same thing over and over again. You'll get carted out because the value traders are buying the dip all the way up. Or just sitting on it and holding it because economically, that's all everyone wants, the stock markets not to crash. So that's all we've done is create an environment where stock markets don't crash. So nothing else matters. Data doesn't matter. Inflation doesn't matter. Asset prices don't matter. All we have to do is keep the machine going, keep the illusion that everything's fine going, and everything will be fine. And that's it. So, again, that's the kind of broad introduction to unlearning things that you've been told. I'll go into in the next webinar all this nonsense about, why you need to stay off Reddit, subgroups in Reddit, all the nonsense about Bitcoin. You got Elon Musk this morning talking about Dogecoin. Dogecoin was made as a joke. And then, he's touting it as the people's crypto. People have to understand that millionaires and billionaires aren't your friend. I'm the only millionaire telling you stuff for nothing, right? Telling you for nothing because, I don't know, maybe I'm a lunatic. I don't know. I don't really know anymore. But I'm telling you everything for nothing. I'm telling you everything exactly the way it is. And you have to look at every bit of news, discount it, every bit of data and discount it. Everything has to be your own decision. Everything has to be based upon what you think and what you believe. Nobody's out there giving you free, good quality information. And if they are, there's an angle. With me, there's no angle. Just do it. Just look at the world that way. And if you don't want to, follow somebody else, then that's also fine. I don't care. I don't, honestly. I don't care. But anyway, all I can say is that this is really kind of the way I'm seeing the markets right now and seeing the world. And, everything has to be discounted and everything has to be looked at that it's trying to get you. It's trying to make you do something, even if it's right, it's trying to make you do something at the wrong time. And that's how powerfully corrupt the world, the media, social media, everything you see has become. It's all, literally like living in the Matrix. You're seeing, an altered, adapted universe specifically for you, for the gain of other people. So yeah, nice way to start your morning, but at least some truth and honesty from somebody. And you have to remember, I'm not some crazy lunatic, no matter what you think. I've worked with the 1%, millionaires, billionaires. I've seen it all work. I've run the biggest trading floors in Europe. I moved to New Zealand 3.5 years ago. Coincidence? Did any of you lot move to New Zealand? Do you have a hectare of land? Do you have big trees? Do you have a big house? Yeah? Do you still kind of go out in the community and do stuff? I saw the world was changing. I saw how it was changing. And I went to the only place that I knew that I would be relatively safe in my, way of life and my way of thinking. And yeah, it certainly affected me in lots of ways, but a lot less than other people. But being right before you don't have the opportunity to do anything about it. So that's what I'm saying about the markets right now. If you don't change the way you're thinking and change the way you look at any kind of economics or any kind of news or any kind of data or any kind of way of trading, then the market's going to be out to get you, and you're going to have very little chance of success. Anyway, blah de blah. Next week, next webinar will be in a week's time. Again, I'll talk about the Reddit, crypto, all that kind of stuff, and tell you the pitfalls and manipulating markets, how I used to do it and how you can do it. Books though, 79 ratings. So if you do want to kind of like just have a read and take a step back, and all the things that I wrote in the book are still relevant till most of it till today. Again, the 80-20 rule of reading the markets might not be as relevant, but it's still worth reading. And again, it's more understanding about your opponents, the people in the markets, how they think, than actually understanding, kind of what is right and wrong. Anyway, guys, that's me. If you want to get me on Skype at Steve Ruffley, steveruffley.com, or email steve@steveruffley.com. Just Google me. There's plenty about me. And ask me any questions, and if I can be of any help to you, I will do that. Right, guys. Well, thanks to FX Street and the guys, and I'll be here this time in a week's time. All right. Take it easy. Thank you.